So look, I appreciate everyone coming out. We're going to have a conversation about copper. And I think the first thing when we think about copper to understand is that, historically copper has traded as a proxy for GDP growth. And we saw that through the super cycle with China. And we've seen, explosive growth in the copper price when there's a perceived economic boom. And, what has happened in the interim since the super cycle is that there's been a complete lack of investment in copper. And so whilst historically that driver for copper and copper price and copper development for projects and raising capital has been GDP growth, we're now entering, or we've already entered, a really interesting moment where, notwithstanding whatever's happening globally with the growth of GDP, we've had no investment now really in the space in probably 15 years. No material investment. And, I think what we're going to talk about today is the importance of emerging markets, frontier markets like the DRC, PNG, as really jurisdictions for the frontier of copper growth. And without that growth, we really aren't going to be able to see the investment in the infrastructure in Europe and Canada, the US and China for the ongoing electrification and upgrading of the power distribution.
Yeah, and just to add to that, I think we're at a phase now that there is a lot more attention being brought on some of these commodities. Obviously, we've seen gold and silver and others do spike in the last while, and I think we're now also seeing the importance that copper plays in this. And so I guess the first question to you, Anthony, is you often talk about commodities being an option basically on some of these junior companies. How do you see that being played out in terms of being able to get exposure to copper as a metal and exposure to the companies that are exploring, developing, producing these assets?
Yeah, so I think you're talking about an investment, which if you think about these large cap stocks, they move in small increments, 2, 3, 4, 5%. They don't have these really strong moves like we're seeing in some of the microcap stocks. But what you're seeing is these stocks which might be low grade or have low grade assets in what have historically been thought of as difficult jurisdictions. You're finally seeing those stocks, their share prices start to have big moves. And the reason for that is a stock that would have been low grade, in a difficult place to reach, that needed power and infrastructure, all of a sudden in the current copper pricing environment, that project makes sense. And I think that's really, important to point out is these projects have not been funded on any level now for probably 15 years. And, you've had very limited copper expansion, say, in North America or in Europe, or even in South America for that matter. And so, we're finally coming to this point where we've had no investment for 15 years, 10, 15 years. We have increased demand. In fact, we probably have declining production if you look at the numbers out of Chile. And where are we going to build these things? And, there's probably any number of projects in Nevada, and maybe they'll get built or maybe they won't. But I think we have to start looking at companies and projects, or companies with projects in the Congo, in PNG, in some of these jurisdictions which none of us have really ventured into now for more than a decade.
So I guess that brings up a really good point in terms of, there's a lot of talk about U.S., Canada, building mines in North America, creating that domestic supply chain. But these other frontier markets, as you like to call them, in terms of DRC or elsewhere, are those the next frontier? Are these where people should be looking at for investment?
Yeah, my experience speaking with people in the U.S. government is, initially about 18 months ago, there was this idea that the U.S. government was going to create a supply chain for critical minerals, including copper and uranium inside of America. And the math doesn't work. The deposits aren't there, or they're sitting in a national forest that's never getting built, or it's on the edge of Santa Monica, or whatever the case may be.
And it's not being built tomorrow.
It's never being built, because whatever the federal government policy is, you still have somebody's little house right there, and they're going to sue you and tie you up in court. And so I think where the US government is getting to now is a realization that, NIMBY is real, not in my backyard. And so even in the last 2 months, we've seen a huge move into places like the Congo. So a complete no-go zone for most investors over the last decade. Now you have the US government lining up to create a supply chain into a country which has been historically challenging. Look at Papua New Guinea, also a place I've been a bunch, not the easiest of place. You're not, flying into Miami. At the end of the day, some of the largest undeveloped copper projects are sitting in Papua New Guinea. They're sitting in the Congo. And I think what we're seeing now is a realization that, especially in the US, where there's this jostling between the US and China to really control the future of their economies, they got to move beyond the US in order to do that. And it's happening very quickly into jurisdictions which were complete no-go zones for investors even 18 months ago.
You kind of answered the question I was going to ask next, and that really is this the way that U.S. can compete against the likes of China or other adversarial countries? Is that the mechanism to invest into some of these countries that were previously were not touched, were not the groups that not the areas of jurisdictional choice?
We live in a kind of, most of the people in this room we've lived our lives in the halo of like post-World War II, like that order that was created out of World War II. And I think as that generation has passed on, like the world has become refragmented again, and all the globalization that happened in the 80s and 90s is being unwound. And we're not talking about rare earths up here, but if you look at 98% of global installed refining capacity sitting in China, you have tensions between China and Taiwan. The U.S. just invaded Venezuela, whatever that means. It's kind of crazy. You have a war in Russia. There's a realization now that completely offshoring all of this, offshoring pollution doesn't work. And the U.S. government order for forget the rollout of electric vehicles. Let's just talk about national security, having power to everyone. That is going to require definitively going into Africa at a minimum if you're the U.S. government, and probably going into Australasia. And we've seen that. I mean, Congo is the great example. The U.S. government is now putting out releases, having a special relationship with Jacquemin. And that's a complete 180-degree shift from where we've been for the last 15 years.
And I guess on that note, I mean, it takes a long time for these mines to be actually built, right?
But that's actually the most important thing.
Yeah.
So, on average, it's 15 years from discovery to building a mine, if it's ever going to be built at all. But only one in, thousands of these projects are built. And so, I think Robert Friedland famously talks about seeing the price of copper with a telescope. What is true is everyone has woken up to this today. And even if everyone kicks it off today and the US government and the European Union are all putting money after it, if you start the permitting process today, in the best of times, you're talking years. And then once you get through that permitting process, once again, it's years to build a mine. And so the lag on the supply response for copper, especially copper, is uniquely positioned because, there are gold mines that can be built for $100 million. When you talk about large-scale, big, disseminated, low-grade copper projects, you're talking about $2, $4, $6, $8, $10 billion in capex. And not to digress, but what we've seen in the market is investors have a choice, and they've chose tech, they've chose AI. They've not had the returns in mining until maybe the last 12 months that has warranted them investing. And so, in addition to acknowledging the supply kind of cliff that we're hitting, we also have to say, well, what are we going to do? Because even if we're kicking off right now, and the U.S. government appears to be doing that, it's going to take years to actually permit and build that supply, even when you're talking about fast-tracking it and brownfield expansion.
Yeah, and all of this obviously takes investment. It takes the capital, right? And so where is that capital going to come from? Are we going to see it move from the crypto world, and are we going to see it coming from other places into the mining space again? I mean, there seems like there's a lot of excitement here today. There's a lot of attention being put to the mining space. Will we see that happen with copper?
It feels like it may be like a little bit like the good old days. I think now is the first time that you can go out and buy a copper penny stock with a big low-grade deposit, as it was described in the last cycle. All of a sudden, the low grade is the new high grade. Have that stock potentially move up and re-rate. And then, there are tens of billions of dollars now, whether it's a partnership between Saudi Arabia and Orion, whether it's a partnership between the US government and any number of funds. I think that CapEx for the first time is really going to start to be there. And so that ecosystem, which has historically worked, where retail, small investors come in, they fund these projects. I think in particular the historic large deposits are going to be really interesting, where they have old, outdated 43101s. That early $5 million is going to fund re-looking at it, re-examining those reports, updating them, and then bringing in partners. And I think that's why it's probably one of the most interesting, times. I can tell you a stock, I did a placement in at 3 cents. I just looked, is at 8 cents. I mean, when is the last time in 30 days the stock doubled? Usually they're going the other way. They're going down, not up. So it's a pretty exciting.
Yeah, so I guess it starts from the audience, right? I mean, it starts from the retail investors that are out here. It starts from that level. And
retail can make money. I mean, yeah. I would say the game has been rigged because retail and everyone left the space, right? Remember, the entire space is still a fraction. You can get a couple of the large cap SPX companies that are bigger than the entire mining industry in aggregate. And so when you think about fund flows, and you think about asset allocation, if we just get, as an industry, forget copper, as an industry, if we just get a fraction of a percent allocation from the BlackRocks of the world, all these microcap stocks that we all know and love can absolutely explode higher. And I think this is the first time in probably 15 years that's been true. There have been moments where lithium happened or cobalt happened, but now, we're talking about copper, but you have silver at 112 and you have gold at 5,200 or whatever it's at now. So it's also a moment where I think we all can make money again, which is the first time in a while.
Yeah, and you get that redeployment into the other classes of assets, et cetera. So, and I guess it's part of that that allocation that you speak to. I mean, I think if we start to see that demand is there for these metals, right, and the risk to supply and the risk for the defense is being a big one in the United States.
I think the copper, the most interesting tell for me is look at copper's price, but look at the instability in the world. Like, look at there's not economic clarity. It's not like we're in this global kind of boom. Like, it could easily have a big recession. And yet you continue to see the price of copper marching forward. And to me, that really signals a supply deficit, which is, I think, much harder to correct just because of the turnaround time on these big projects.
But we haven't seen that big jump in copper prices, right? I mean, we've seen it incrementally. I think we were here last year and it was around $4 or something like that, right? I mean, it's grown. It's increased, but it hasn't seen these huge movements in price.
Well, copper, I think, hopefully, is more subtle than silver, which is just kind of roofing, because copper is an industrial metal which has real demand. So at the end of the day, people aren't stockpiling copper in the same way they are silver. They're actually using it. And so I think that you see copper's rise as slightly more gradual, because at certain price points, recycling and substitution comes in. Now, that substitution and the recycling doesn't really change the narrative, but what I do think is it prevents it from kind of having these limit up type moves that you see in some of the precious metals, because it's just those are in part currencies, whereas this is an industrial metal that has real physical demand.
So we've talked about jurisdictional risk. We've talked about some of the investment that needs to happen. Where else do you see, and maybe it's not just copper, but maybe some of these other critical key metals to growth. Where do you see this coming from? Like, how do we supply that next 15, 20, 25 years if the mines aren't being able to supply them right now, right?
Yeah, I mean, I think the main problem was early in the 80s, there was a decision made or taken to offshore pollution in America and really in the West. And the idea was we're going to offshore that to China. And so China has really spent its time since the 80s creating the installed refining capacity for rare earths, in the broadest sense, or we'll call them critical minerals because some of them aren't rare earths. And so they've built that entire refining capacity. They've done it for nickel, by the way, to a large extent. They've done it for copper. And so, I think that in addition to actually having mines and having supply, like say out of the Congo, probably you're going to have to see jurisdictions like created where maybe there was historic, cracking in the hydrocarbon industry. So, in polluted areas in the States, you're going to have to see refining capacity built. So I think that's another part of this, is you're going to have to actually see the re-onshoring of refining capacity to the U.S.
Yeah, and I think that's another big aspect of this is the refining, right? You might be able to mine it, but where do you actually refine? Where do you produce this? Where do you see that as a bottleneck?
The refining or the production?
Both.
Well, the refining is just simple. I think if you don't control the refining, when you look at what has happened with Indonesia and nickel, for instance, all that stuff goes to China because it's being refined there, and so they control the offtake agreements. They control that whole process. Now that nickel may still make its way back into the market, but if there was some reason why they didn't want it to, they could block it, and you wouldn't be able to just say, okay, well, we want nickel. We're going to buy it from Indonesia. Well, yeah, where are you going to refine it? And I think the same is true with copper. And this is why it all circles back to this kind of moment around making money, is you have these governments, the US, you have Canada, you have the European Union, realizing that they're a decade or more behind China and creating these huge pools of capital to go out and invest in projects. And they're probably going to have to invest in projects that don't already have a Chinese master. They're going to have to invest in projects which were overlooked last cycle, which are probably been drilled out to a certain extent and have the ability to become a mine. And as part of that capital introduction, I think they're going to have to say, we'll give you X, but by the way, we want an offtake, which is exactly what China did and what people have been talking about now for 15 years. I think that's going to be the future of a lot of these pools of capital that are going to invest in these projects.
So we're running out of a little bit of time here, but I guess from your perspective, if you're an investor in the audience, are you looking at investing into producers? Are you looking into investing into developers, explorers to get exposure to that copper market?
Everyone has to. I mean, that's specific to everyone's own risk tolerance. But I'm a gambler, so for me, I invested in this company. I don't know, 3 weeks ago now. It's Freeport Resources. It has this massive deposit in PNG. It's low grade. It's in a remote place. And you know what? It could be a mine. It went from 3 cents to 8 cents. I bought another one in California. It's this huge deposit. It's low grade, but it's in California. And maybe the US government will say, we're going to build it. And so for me, I really like the optionality of projects which people know about, which have been drilled out, but for whatever reason, probably the grade, they weren't built last cycle. And they have the opportunity this cycle again. So I think that's what's exciting for me. But once again, everything is specific to each individual, and buying a big name like a Rio is always going to be safer than buying a penny stock.
Awesome. Well, thank you very much, Anthony.
Yeah, thanks for having us.